It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast radio show, where we talk to the property expert commentators from around the country. And the weekend, it is come and gone. Another new week of opportunities if you missed out on buying real estate across the weekend. The winning and the losing of properties, I guess that is just part of the real estate game of luck and fortune. And talking of luck and fortune, I did over the weekend manage to watch the new Colin Farrell movie called Ballad of a Small Player. Now, the film is set off the coast of China in the gambling district of Mackay. Never been personally. I've been to Beijing and Chengdu and parts of Sichuan, but I am not a gambler. But the film does give you a sense of just how lush and opulent Macau is, and you can see why this generates apparently 15 times more revenue than Vegas. Loved the performance in the film and almost didn't recognise Tilda Swinton. And if you like the themes of chance, redemption, and the unexpected connections that can help shape our destiny, then give it a watch. It's currently screening on Netflix. Well, it's a Monday morning, November the 3rd. Let's go to Sydney and catch up with Eliza Owen, the Head of Residential Research Australia at Cotality. And good morning, Eliza. Welcome back to the Real Estate Breakfast. First question, have you ever been to Macau, and do you enjoy a flutter? The reason I say flutter, of course, the Melbourne Cup tomorrow.
Yeah, g'day. Thanks for having me. No, I haven't been to Macau. I'd love to go. And in terms of a flutter, I'm not much of a gambler myself. I've never been very lucky at that, but I do like the dress-ups and the champagne in the afternoon.
Yeah, that's what the Melbourne Cup really is all about, is the dress-up and the champagne. Also, something coming tomorrow, we've got a shock rise in inflation, which has forced Australia's major banks to rethink their interest rate forecasts. The latest data shows the Consumer Price Index jumping 3.2% annually. That is up from 2.1% in June, effectively killing hopes of a November rate cut. Well, that is what a lot of commentators are saying. CBA have scrapped its forecast for further easing, expecting the cash rate to hold at 3.6%, while Westpac at the moment has put its outlook under review. Economists say that strong consumer spending and housing demand have triggered a faster than expected rebound, keeping those rates higher for longer. So tomorrow we will know the outcome from the RBA. Eliza, tee us off. What are you predicting here?
I think it's pretty clear at this stage that the RBA won't be cutting rates at the November meeting. And I think it's unlikely that we'll get a rate cut at the December meeting either. It doesn't completely rule out another rate cut early next year, depending on the data flow. And it certainly doesn't rule out further increases in housing values, although the 3 cash rate reductions so far this year have helped to support higher prices. It's not too often that you get some real certainty around RBA meeting decisions, but I think that's one benefit of this reacceleration in inflation, is that it's definitely stamped out expectations of rate cuts. And for once, we can talk with some certainty about the outcome of the meeting.
It looks like exactly what you're saying is going to be the outcome. Now, talking of outcomes, let's have a look at the Home Value Index, because you've got the latest information here.
Yeah, so for October, home values rose again, but it wasn't just any increase in home values. We've seen values go up by 1.1%. So that's the fastest monthly gain since June 2023. It coincides with continued increases in income, very low levels of housing supply, with listings sitting about 18% below their historic 5-year average for this time of year. And of course, the expansion of the home deposit guarantee, where the federal government have removed income caps for the scheme and places for the scheme, as well as significantly increasing the property price caps that qualify for it. So no doubt that's added to the flurry of buyer demand that we've seen in the month of October.
Yeah, and the expanded Australian government 5% deposit scheme, we've got critics that are warning that the scheme could inflate housing prices in eligible segments. And one report that I did note is that many earners like nurses and teachers would end up spending 70 to 80% of their income on repayments under the scheme. And if you look at those professions, already they carry workload stresses. So we really don't need our teachers and nurses to feel more stressed out with these new mortgages. Others are saying that the scheme potentially increases demand, which I think potentially we are already seeing.
Now, this scheme was very popular when it was first introduced in 2020, but it was small. It was only 10,000 places. And as the success and popularity of the scheme has been demonstrated, successive governments have gradually been expanding it, 35,000 places in a second iteration. And as of October this year, there's no place limits on the scheme whatsoever. A lot of economists pan this as adding to the demand side, adding fuel to the fire of housing value increases in Australia. And to be honest, these October Home Value Index results suggest that it might already be having some impact, with the low and middle segments of the housing market rising more quickly than the high end. And it's those low and middle segments of the housing markets that sort of fit under the price thresholds for the scheme.
Yeah, and the Home Value Index for the month of October, the pickup in the pace, I understand the fastest monthly gain since June of 2023. Tell us about that.
Yeah, so usually you would expect to see a little bit of a seasonal pickup in home values through spring, but this comes off the back of maybe a more subdued upswing so far. Nationally, home values were rising by an average 0.6% a month, so to see them jump 1.1% in the month of October reflects that not only are we in a rising market, but that rising market is picking up steam. It's really heating up.
And we are talking to Eliza Owen. When we come back on our Monday morning, we'll talk about the monthly leader, and we've got Perth in the mix, and we'll also take a look at the regional activity. We'll do that after this.
Stay ahead of the competition with the latest news, insights and data analysis on the property podcast that keeps you informed.
And right now it is time for another property tip, and we are catching up with our auctioneer there in Adelaide, Brent Ilicic. We spoke to a few weeks ago, and Brent, many people, they walk away from an auction regretting not bidding sooner or not bidding at all. So the question this morning is, what advice would you give to somebody who hesitates? We all know these people, they hesitate too much during an auction. How can they strike the right balance between caution and decisiveness?
Pressure test yourself in private. If you think it's $950, ask yourself, would you pay $960 if someone bid $959? So on and so forth. All of a sudden, your new pressure tested limit's $1 million. Figure out the fair market value for the property. It might be $920. And say to yourself, what's my plan? Very basic plan going to be? Well, there's no way I think it could sell but below $880. That would be ridiculous. So I'm just going to place an opening bid at that number of $880. And my play area will be between $880 and $1 million. And I'm just going to throw a few bids in and see what happens. That's a very basic and simplistic approach to compete and contest.
We are just as addicted to property as you are. The Real Estate Podcast.
And it's a Real Estate Monday. With us is Eliza Owen. And Eliza, let's have a look at the monthly leader for October. This is for the latest Home Value Index, because I understand you've got Perth in the mix and also Brisbane really revving up.
Yeah, this is remarkable. So these are markets that have already increased over 80% over the past 5 years, and now they're continuing to lead the pace of gains. So we've got Perth home values up 1.9% in the month, and Brisbane is sitting up 1.8%. Now, these markets have been supported by kind of virtuous cycles, as you might call them in economics. So a lot of migration to Western Australia and Queensland, which means you have increases in economic demand, which means you have more jobs growth, which means you attract more people. Add to that things like a strong commodities cycle, which is supporting the mining sector in WA. And in Queensland, of course, a boom in infrastructure ahead of the Olympic Games for Brisbane. And this is all equating to outstanding increases in property prices. Great for homeowners, but of course not so good if you're trying to break into the market with the deposit hurdle getting away from you.
And we should look at what is happening regionally because there has been a lift.
Regional Australia has been really interesting. It's kind of lagged capital city growth performance through the start of the year. But what we're seeing now is that the market has jumped up a full 1 percentage point. And again, that's off the back of average monthly increases of about 0.5% through the year to date. So this is a significant pickup in the pace of growth for regional Australia specifically. And again, I think coming back to the expansion of the 5% deposit scheme, a lot of the price caps that applied to capital cities also applied to major regional centres, areas like Newcastle, Illawarra, Geelong. While the price caps of the scheme might cover about half the house markets in Greater Sydney, it would cover nearly 100% of the house markets in those big regional centres of Illawarra and Newcastle. And I think that may have pushed some demand to the regional centres. And again, it's a reflection of the challenge that we have with regional Australia being perceived as an affordable alternative to the cities. This just goes to show that if you're attracting a lot of demand to the regions, it makes it harder for locals to break into the market.
Really interesting stuff when it comes to the regions. Just before I let you go, we're talking about the RBA coming up tomorrow with that decision. So presuming that it's not going to decrease, I guess all eyes are going to be on February. Is that a good call, do you think? February for perhaps the next rate cut?
I think it remains very data dependent, and based on what we're seeing in inflation at the moment, it is very uncertain, I would say. It's a good point, though, to think about the outlook for the interest rate, because obviously that's something that's going to have an implication for housing values as well. At the end of the day, we have a big imbalance between demand and supply of housing in Australia, but if we don't see a further rate cut, and CBA actually put out in their response to CPI data for September, that they don't think there's any more rate cuts coming. It's the end of the cutting cycle now. With that difference in trajectory expected for the cash rate, that might actually help to take a little bit of pressure off housing market growth. And of course, you've got other kind of headwinds for the market, like the potential of tightening of investor credit, where investor credit in the market has been picking up, and that could be perceived as a bit of a risk as well. So as hot as the numbers are for October, I guess there are a couple of headwinds to be thinking of for the market as well.
And then, of course, you've got the Christmas spend and just whether or not that's going to get out of control or not. Eliza Owen, thank you so much on our Monday for all of that. Good luck with the Melbourne Cup too for tomorrow. And thanks for coming back onto the Real Estate Breakfast this morning. Appreciate it.
Thanks. Take care.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
It wouldn't be the show it is if everything ran smoothly, everyone got on well, all the houses sold for healthy profits at the end of the day.
So it's an account in which you will have your transactions going through, your savings sitting there, and basically on a daily basis, the lender will do a snapshot and it's like a set of scales. If your mortgage is sitting at $500 and if you've got $20,000 collectively in your bank accounts that are linked as an offset, you will only pay interest on the difference.
It's remarkable. It doesn't even feel that long ago where I was, witnessing an oversupply of units. I mean, you cannot say that for Brisbane now. It is a grossly undersupplied housing market, which is really coming out in price growth. I mean, we've got house prices and unit prices edging up another 4%.
The media is not wrong in the sense that the market is uplifting, but I think the correct terminology would probably be that we're seeing a more stable market and we're seeing stability and we're seeing measured growth.
We connect you to the best real estate information across Australia. The Real Estate Podcast.